All right, good evening. My name is Daniel Dreistra. I am the current president of Defender Capital Management, and this is our January update, excuse me. I'm joined this evening with Tayden Van Beek, our portfolio manager, and Brandon Hansen, our economist, who is taking over from Nathan Waninger. So the agenda for this quick video is we're going to go through the portfolio manager's report. So Tayden's going to take us through what the portfolio has done in the past 30 days or so, and and I'll talk a little bit about how we've performed in the year of 2022. And then Brandon's going to give us a very quick update on the economy and its impacts on our portfolio. So we'll get started with Tayden.
All right. So one of the first things to look at is we were up since we met. We're up about 1.3%, which is pretty good. And we did beat the S&P 500, which is always good. We are currently still sitting on a lot of cash from our latest donation. Right now we're choosing a way, trying to find a path on how to spend that, because we don't want to spend it all at once and just burn right through it. So our portfolio value currently sits a little under $1 million, which isn't bad. Looking at some of the stocks that we have, some of our biggest movers. First thing you're going to notice is the top two losers are health stocks, but Elevance Health, it's not really a health stock. It's more of a health insurance stock. But either way, CVS and Elevance, they're kind of related because a lot of people will put money into them during times where they think the market's going to be choppy and there's going to be a recession. And then when people are a little bit more optimistic, they'll tend to pull it out and put it in a little more risky investment. For example, I think Elevance returned about 8% in 2022, which is pretty good considering the market conditions. So, I mean, that's something to watch out for. People could be pulling some of their money out of there and looking for something a little different. And one of our biggest winners is Nike. They had earnings on December 21, and they just killed it. Their stock was up 12% that day. That's a good sign. Could be a sign that our economy is recovering or getting a little bit more active. So that could be good. And US Bank is on there too, just because the interest rates are up and they have a lot more opportunity to make money.
So before we go on, I'll just jump in there for a quick second and talk about a little bit of our performance through 2022. So as a club, we returned a negative 18% on the year, which is not great. It is pretty well in line with the S&P, but it's disappointing. It's one of the worst we've had in recent memory. So we are working to improve that. It's challenging market conditions, of course. Rates are rising, and we're finding out who is a real investor in these trying times, I guess. It's easy to be a great investor when everything's going up. So we're looking forward to the 2023 and to the challenges that the year is going to hold. But with that, we're going to let Brandon talk about the economy a little bit. He's going to be pretty brief, and then yeah.
So similar to Nathan's update video in December, we are looking at the same data because the Federal Reserve has not released new figures for us, but they are targeting the 4.25% to 4.5% rate for the federal funds rate, which could reflect a drop in the total market as investors are looking to minimize risk and can find other forms of investment besides the stock market that offer them good returns for less risk with such a high federal funds rate. As we can assume, this federal funds rate is being raised to hopefully curb the inflation we have seen in 2022. But there has not been a whole lot of updates as of our December update video that Nathan has given us on the economy.
Yeah, so in conclusion, we're just getting back from break, and the portfolio has performed okay over the break, and we're looking forward into the new year. So we're going to be we have about $59,000 in cash after receiving a large donation, for which we are very thankful for, and we're going to be deploying that in the coming. Probably the pace is going to be about over the next 2 months. every 2 weeks or so for the next 6 weeks. And then that's going to be deployed. We're going to hopefully address some imbalances in our portfolio. So we're a little bit underweight right now in infotech and consumer discretionary. So we'll be taking a special look at those two sectors. But keeping in mind the sort of macroeconomic effects, we might stick to safer stocks yet as well. We have to do that analysis. So that's kind of the story looking forward. As always, we're very thankful for all the support you guys give. And if you have any advice for us or any questions or concerns, please feel free to reach out. So thank you.